Another busy week of earnings on deck. Tons of big tech, autos, pharma names set to report. But what is the #1 earnings report our traders are watching? Let's go around the horn. And Tim, why don't you kick us off?
To me, it's UPS, Mel. I mean, it's the economic bellwether stock. It gives you great insight into not only supply chain and some of the bottlenecks out there in the economy, but obviously shipping costs, labor costs, how bad are they? Certainly UPS would feel them about as much as anyone. UPS, however, also has the ability to pass those on. Fuel surcharges, they've got pricing power. They've actually raised prices. They passed them on. They're more exposed to the upside with economic bellwethers on the enterprise side. And I think, again, their ability to actually move to higher margin clients and optimize their entire cost base is part of why it's such an interesting story. It's also a company that, if we think about how do we, what multiples do we put on companies these days? It's trading kind of in the bottom of a 5-year range, somewhere around 15 to 17 times. You put a 17 multiple on the stock, it's a $220 stock. If you put a higher multiple on it, which I'm not sure we will, I think it's a very attractive stock. But either way, I like them into numbers. But come on, I mean, UPS is going to give you as much of a read on the pressure points out there as anybody.
Bonwin, what's the earnings you're watching?
I'm actually taking a look at Snap. So we've talked about the MAGA or mega cap stocks, and we really want to understand, listen, is this going to be a very narrowly focused bounce, or is this going to seep into the more speculative pockets? I mean, this has all the makings of the hood chart that you pointed out earlier. I mean, it's come off from 80 to 30. It's got a high price to earnings, negative free cash flow. Are investors really willing to stomach that type of risk? And I think Snap squarely will give you insights into all of that.
Yeah. Nadine, what's yours?
I'm looking at Starbucks next week, Mel. I mean, obviously there remains disruptions of their pre-11 a.m. business, but the big question for me is, has the consumer had enough? If you remember from their fourth quarter back in October, sales were soft. They expected costs to run higher. And this is a business that's maximum scale. So it's not like they're going to be, starting a bunch of new stores out there. It's about U.S. ticket growth. Are people going to pay the higher prices? Are they going to spend more? It's about China. Are people in China going to spend more on it? As well as the expenses, similar to what Tim said on UPS. They're going to have higher labor costs. They're going to give a guidance on that. So I'm looking at that. And I'm also looking at customer attrition. Are people just going to walk away from this and spend less in ticket and volume? It's really different than, this is an everyday consumer luxury item versus the real luxury. And that's, LVMH and Diageo printed awesome numbers this week. This isn't that. So I'm looking out for the everyday person, upselling into that. What are they doing?
A $10 pumpkin spice latte is pretty steep to me. I mean, you don't even, yeah. I'd rather spend on the wallet. 52-week low, by the way, on Starbucks shares in today's session. Steve, what are you watching next week?
Let me start off with saying Starbucks had an outside day, too, so maybe Nadine is right. I'm watching Alphabet. Because I want to see if Alphabet's going to take a page out of Apple and Microsoft and continue the momentum in the market for the large cap tech sector. And just think about everything that people are searching to get back to their lives. Hotels, airlines, an endless amount of things. Google or Alphabet probably will put up good numbers, and that should be enough to keep the average investor in the market.
People forget about the leverage they have to travel and travel searches, Bonawyn. Are you feeling good about Alphabet going into earnings?
I always feel pretty good about Alphabet. Listen, it's a pretty ubiquitous name. I think it gives you a general pulse on the market. I actually don't see the downside risk that I do in some of the other names. So, given what we've seen from some of the other large cap names that have pricing power and are very have a very broad type of branding and presence, I think it sets up pretty well.